joined by Martin Pring, president of Pring.com, on the line from Florida. Martin, thanks a lot for joining us. Last time you were here, you had a target of 6,400 for Dow, and of course we are now pretty close to that at about 6,600. Do you still hold your targets, and you believe that there's much more downside for the U.S. markets from these levels?
I honestly don't know, but actually that wasn't really a target. That was just a sort of an objective as to where we might go if it went down towards a sort of a rough objective I had. But there really is no way of knowing how far this market's going to go down at this point. I did some work on a lot of bear markets in the 20th century, and I found that really when you get to this stage in the bear market, which I think is the last decline, things can be pretty hairy.
So you do believe that we are in the last phase of a depression kind of scenario in the markets?
I see a little bit of pessimism taking hold in the United States, but not as much as I'd like to see in terms of calling a bottom. And I certainly see nothing in the intraday price action today, for example, to say that we've reached a low. I think what we need is to see a big build-up in volume, ideally, a sharp down day, and the price close back towards unchanged, something of that nature. I think that would help to give us an idea that we've seen an intermediate low here. But so far I see nothing.
Any price objectives you have for the Indian markets, either the Sensex or the Nifty, which you track?
Well, the Nifty, I think, is being dragged down by New York. It broke an important trend line yesterday, and I'm remaining cautious on it unless we get a daily close above 3,000, because that takes out the previous minor high and also breaks a fairly significant trend line, indicating that yesterday's break was a whipsaw. Until that happens, above 3,000 on a daily close basis, I remain cautious.
Martin, how would you now allocate cash across various asset classes, including cash itself?
Basically, we're very gun-shy of equity markets. We're really looking at, I guess, the major allocation would be towards good quality corporate bonds, which we look at exchange-traded funds in the U.S., short-term government, U.S. government bonds, and also, since we're gun-shy on the market, we're looking at several cross relationships between different sectors in the market. Going long one sector and short another. It's a kind of a chicken way of playing the market, but when you don't feel very confident about the market, it's a relatively safe way to play. We also have a small insurance allocation towards gold and another one to the U.S. dollar in terms of a U.S. dollar ETF.
Martin, one final question then. By what time do you see, if at all you can predict, some sort of recovery coming back to global markets?
I wouldn't be surprised to see it happen in March, but I have to tell you that my very long-term indicators, which I can take back, a lot of them 80 or 100 years, are very, very close to a buy signal. So that's why I think once this particular downdraft is over, we'll see the formation of the real bottom. As to when that would be, there's actually no way that anybody can accurately predict such a thing as that, unfortunately. I wish we could.
Thanks a lot for joining us, Martin Pring. Well, fundamentally, not so pessimistic voice, really. Though, of course, the warning is that no one knows how long the downdraft can really last. And things have a way of getting out of hand, both at the top and at the bottom. Let's take a